Hello, hello, hello. Welcome to Al Stock Trades. Hope everyone's doing well. I am very excited to talk to you guys and pretty much summarize just a little thought that I want to bring to your attention with a little bit of data. Okay. So lots of folks are selling their Clover Health stock, right? A lot of people are selling essentially the stocks that have underperformed the market, which historically has been unprofitable companies and companies with a negative free cash flow. So, what I expect Clover to do in the next coming months, it depends. I do believe, um, let me go ahead and open this up here. Whoopsies. I do believe without a certainable doubt, I do believe that the stock is heading close to its book value, which is around 83 cents. Now, the more money they lose, the more the book value changes, right? So, this is where I believe the stock is headed around 82 cents. Now, you can go to Brain Machine and it'll calculate the book value per share. Okay. Now, you have to understand something. If you were to go back a couple months ago, in fact, a year ago, when they were making around $400 million in revenue and losing more money, many folks were buying the stock at a higher evaluation because the economic circumstances has changed. Let me explain. Let me explain. If you were to talk to retail investors during this cycle, retail investors near 2020 were literally in a position where they were extremely ecstatic. In fact, the market was starting to go up high and many people started to worry, but then the the sentiment started to rebound. Now, before getting really deep into the next here, what are we looking at here? What is this, right? What is this graph that I'm looking at? This is the University of Michigan Consumer Confidence. Okay, when I teach you guys something and when we do statistical analysis and data analysis, we like to use data points that have existed for such time. The University of Michigan Consumer Confidence has been around since the 1940s, okay? And it's personally what I like to use to measure exactly what the retail community is doing. How are they feeling about the economy? And let me just be very frankly clear. If you do the opposite of what retail investors do, you will do great. Now, what's interesting here is this big drop that we see here, this big little drop here that we see is the COVID drop. The COVID drop happened right around here. Okay. Right around here. This was COVID. That little blip. People sold in this little blip. This little blip was COVID. Okay. If you don't believe me, go all the way down here, 2020, right there, 2020. This little blip was COVID. And you can see a drop in the University of Michigan Consumer Confidence. Now, what is this freaking Michigan thing? Ladies and gentlemen, this is the most reliable indicator that many hedge funds use, many people that have invested billions of millions of billions of billions of dollars in the market. Okay. And this is the first time you heard about this. Well, welcome. Welcome. What do we see now? What do we see? We are at the lowest, the freaking lowest sentiment. The lowest sentiment. If you were to ask anybody in the market right now, they would say it is a trash market. It is a trash. It is literally gutted, uttered, scamish, 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 scamish. I want to rhyme a word, but I'm not going to rhyme it. It's disrespectful, right? It is a scamish trash. Okay. Now, last time we felt like this was in the 2008 financial crisis. And this was one of the greatest opportunities to buy stock. Okay. Now, if we go down here in the 80s, in the Paul Volcker eras, when stocks were, they came down, some of them did. You don't even see the blip. you don't even see it. You don't even see it. Isn't that crazy? That should tell you something. I mean, this was COVID. Most people sold their life savings here during this little small drop. I mean, just this little insy-bincy, tiny-wincy drop. And for people that don't know, this is XPX. What is SPX? It is the S&P 500. So what does this mean? And what the hell are these numbers down here below? What is Al trying to tell us here? All right. Okay. Right now, we're getting a lot of signals. This literally goes back more than 50 years. 60 is like what? 60 years of data? Let's just see what we can see here. This is 67 years of data. And these are the dots that we see. These are how many times we've reached the level of shit. Okay. Now, isn't green a good associated with a good number? Why is a shit consumer sentiment associated with a green color? Because it is a common thing that I want you all to know. When retail investors think the market is amazing, it will become a shit market. When retail investors think it is a terrible market, it is an amazing market. You know, when stocks used to fall like from like here down to here, you saw a lot of people say, be greedy when others are fearful. Be greedy when others are fearful. Well, ladies and gentlemen, listen. Now is the time to be greedy when others are fearful. Now is the time. Okay. We are slowly approaching a time. We are about 6 to 10 months out from pure epic recession madness. As soon as the Federal Reserve continues to increase interest rates, we are going to sludge into a recession, whether the likes that millennials have not seen since 2008. Not the financial crisis. We are talking about increased unemployment levels. Okay? And this is going to be the test of whether you are short-term or long-term money. Now, if you were to look at this data, okay, 6 months from now, we have an 80% chance that we're going to see a 14% rally. 9 months from now, if you collect all the data, 90% of the time, we are going to see a 16% increase. A year from now, 2 years from now, when have I ever gone 3 years? Because we have a lot of data points. And 3 years from now, we have a 100% win rate that the stock market is going to be up 48.9%. Okay. Okay. We have, I see someone right here. There it is. He said 6 to 9 months. Exactly. Okay. My apologies. I haven't been online a lot. I've been working at the hospital literally 15 hours. Insane. But what better way to, spend a life is helping other people. Okay. So here is the magic. 3 years from now, add 3 years, 2022 plus 3, 2025. Okay. 2025. All right. All right. Let me go ahead and go through your comments. That's all I had to say. This is all I wanted to say. Be greedy when others are fearful. We are slowly approaching the threshold. Now, actually, you know what? Let me share the screen just one more time. Let's go to Reddit and let's go to CLOV. Let's hit this and let's go ahead and let's sort to new. Okay. Let's go ahead and exit this. Oh man, just look at that. Look at that knife. Woo! Look at that. Look at that. All right. So look at these comments. Look at these comments. No words. Just numb. Okay. Scam? I must say, every time I think CLOV has hit a bottom, LOL. Right? Don't fall in love with a stock. Let's see here. I saw one that I really liked. I saw one that I really, really enjoyed. Oh, did they remove it? Oh, there it is. This one. Let me up comment this one. Enough is enough. I'm selling. Welcome to the kitchen, boy. This is exactly what I'm talking about, all right? Welcome to the hot kitchen. If you cannot stand a market like this, it just takes so much mental capacity to handle, just the strength, this brick wall you have to put in front of your mind, okay? That Mr. Market is going to knock on the door every day, and Mr. Market's going to surprise you. Just like how people said, this is a new paradigm. Stocks only go up. It's different this time. The market just goes up and up and up. The same way in the same direction happens when it goes down. Okay. Now, we can go to the psychology of the markets. I want to know, where are we now? It seems to me, I saw a couple words that, I'm numb. Maybe some panic. I'm done. Enough is enough. I'm selling. Right? I love it. Okay. It's sad because our mission is to help retail investors, but this is what needs to happen. This is the market cycle. You know what I mean? Anywho, enough being, just a salivating, lion, an Al Stock Trades lion ready to eat. Let's go ahead and go through the comment sections. I'm really enjoying, as you can see, this market because if you love money, I wouldn't say love money, if you love the opportunity of financial freedom, if you love the opportunity of Wall Street, you have to recalibrate your brain, recalibrate your mind to believe that red is good and green is bad. Red is good, green is bad. This is the point of maximum financial opportunity. Being wealthy is not just about the numbers. It is a mentality. You understand what I'm saying with that? You have to be strong, mentally fortified and strong, that your due diligence stands like a pillar. Okay? And I hope that we can teach this, and I really hope that we can push this through to retail, because I'm sick and tired of retail investors getting the short end of the stick. Now, I don't know why this guy circled this. This is a little picture I pulled up online. It looks like this guy's searching this. I don't think we're here. I don't think we're at hope. I think we're between, a lot of people are between different areas. Some people are in denial. Maybe the, Tesla stockholders are in anxiety and denial right now. Okay. Some stocks are in depression, others in panic. Okay. So, Dr. Pro, if we go here to the book value, this is, you calculate this as if the company were to go bankrupt. What is the actual value of the company to disperse its money to its shareholders? It's 82 cents. And what it looks like to me is it seems that it's heading near there. I doubt that it'll go lower than 82, but we'll see. This is a level of discount that I have never seen before in just such a long time, since literally the great, the .com bubble and the great financial crisis. All right, let's go ahead and let's look up some. I'm waiting for Tori to speak to us. That'll be very wonderful. Good. Absolutely. Honestly, you can wait. It depends. I'm just so amazed that a stock would literally go to its bankruptcy value. It's amazing. It's amazing. Okay, it's amazing. All right. Okay. Good. All right, guys. So this is all I had to say. Understand that we are here. We are here right now. We are at the lowest consumer sentiment that we've seen since after the great financial crisis, during the financial crisis, and the Paul Volcker eras, and in the 70s. Okay. 1, 2, 3, kind of 4, 5 times in the past 67 years. In the past 67 years, there have been 5 opportunities to get to this level. You take 5 divided by 67, okay? That's the 7% chance that you have, okay? And that's assuming you were born in the 50s, okay? A 7% chance. It's less because some people are born in, the 60s, the 70s, the 80s, the 90s. And some that are watching this channel are born in 2000, right? This is an opportunity. This is an opportunity. And unfortunately, few will take it, as you can see here. You have to get out of the system that was taught to you. The system of green means good and red means bad. Or better yet, this is the system you must apply. When stocks are up, it's red. And when stocks are down, it's green. You need to flip that paradigm and obviously glue it to financials and understanding the fundamentals of a company. We already know Clover is going to become near profitable and profitable by 2023 and 2024. And we know that in 3 years, we have 100% probability that we are going to get a beautiful green market. I don't have to say anything more, guys. I don't have to say anything more. I love each and every one of you. God bless you all. And I hope we get more red.